On today's hot sheet, I'm discussing CoreLogic's HPI, an updated forecast, mortgage applications, and credit availability. Today is Wednesday, January 10th, 2024. I am Byron Lazine, and the hot sheet starts now. Welcome into this live edition of the hot sheet. As always, we do this show live every single day that the markets are open. It's the only live housing show every single day on the internet. Let me know which market you are tuning in live from, and let's jump right into it here. We've got some data from CoreLogic. We're tracking closely, of course, what's going on with U.S. home price growth. It is stunning everybody and continues to speed up again in November. This according now to CoreLogic data. So just more evidence that home prices have not slowed down and maybe are not slowing down. They just keep going up. U.S. home prices increased 5.2% year over year in November. It's the strongest annual growth rate recorded since January of 2023. Annual home price growth is projected to slow to 2.3% in the spring of 2024 before stabilizing for the rest of the year. Let's take a look at some deeper data here according to CoreLogic. Of course, if you want to get the most out of everything we do at BAM and get access to our show notes each and every single day, just join BAMX. Use code HOT to get 10% off of your BAMX membership, where you get access to show notes like this, as well as our community and all of our new courses and live streams each and every single month. Okay, so going deeper into the report here, month over month basis, home prices increased by 0.2% in November 2023 compared to October. The CoreLogic HPI forecast predicts month-over-month decrease of negative 0.2%. So we're going to lose that 0.2% when their December data comes out from November to December. However, on a year-over-year basis, home prices expect to be up 2.5% from November 23 to November 2024. Here are the areas, regional states, that led annual single-family home price growth. Top 10 states for year-over-year growth, and the Northeast dominates. And this is a trend that continues in other reports that we've looked at, other data that we've looked at, as the Northeast is struggling the most with inventory. Okay, so you have Rhode Island, Connecticut, Jersey, all three up over 10%. Of course, Jersey, if you listen to yesterday's hot sheet, was number one on a list you don't want to be a part of. That's outbound migration. People continue to leave Jersey, and despite the rates, for whatever reason, Jersey home prices continue to shred, and you see, low inventory in the Northeast. New Hampshire, obviously, at 9% there, coming in at number 4, and then you get into some of that Midwest territory with Wisconsin coming in at 8.9%, Vermont 8.4%. Vermont was leading the United Van Line analysis on yesterday's hot sheet. Michigan 7.7, Missouri 7.7, Ohio 7.6, and South Carolina at 7.3% for annual single family home price growth. That's your top 10. Northeast and Midwest obviously continue to be at the top of these lists everywhere we look. It's not just CoreLogic, it's across the board. Areas in the Northeast, South, Midwest with relative affordability driving demand experience these strong home price increases. Some markets in the Mountain West and Northeast saw even larger seasonal, did see a larger seasonal slump rather, due to high interest rates impacting home buyer budgets. Here are the metros, though, with the highest home price growth, and it's different from those states that we just took a look at. You've got Miami, 8.3% year over year increase in home prices, followed by San Diego, Chicago, Boston, and DC to make the top 5. Phoenix, LA, Las Vegas, Denver, and Houston. These are the highest home price gains for November. I'm sorry. So this is highest home price gains in November for year over year numbers. Okay, so November to November on those areas. Going back into their report here, they do put out. We'll share all of these slides if they're useful for you inside of BAMX, if they're useful for your email or maybe your video content. Here's the current year-over-year look from CoreLogic on home prices, 5.2%, debunking a lot of the projections for this past year that home prices are going to go down month over month. Even late in the year, you saw a 0.2% increase on home prices. The forecast for next month, which would be December, negative 0.2%, but year over year, they're forecasting that 2.5%. You see here the regional areas where home prices have gone up the most, as we just covered. Here's another graphic that showcases those metros that we just covered. Here's what's interesting, though, and they do this every single month. We haven't actually looked at this in quite some time here on the hot sheet, it feels like. I think it's worth peeking at least once a quarter. They usually don't change much month over month. But according to CoreLogic, here are the top 5 markets that are at risk of home price declines. Okay, so Palm Bay, Florida, that Melbourne, Palm Bay area of Florida has a very high, above 70% probability of price declines, according to CoreLogic. Florida has 4 in the top 5 here, because you go to number 2, you've got West Palm and Boca Raton coming in at a very high probability of a price decline. The confidence score in this price decline on all of the top 5 is between 50 and 75% from CoreLogic. Tampa is very high. Now, Tampa's interesting because we just saw some data last week that said Tampa is going to be one of those markets that continues to accelerate. I was actually surprised that Tampa was going to be one of those markets that continues to accelerate, because when we look at Tampa, for example, as we did just a week ago here on the hot sheet, when we looked at, and if you remember that link from Freddie Mac that had 384 metros, Lance Lambert put it together, Resi Club. It was a, I can bring it up if we want to take a look at this together. I think it's important, because if you're inside of BAMX, this is linked there, easy for you to find, so that you can use this in any of your content that you need, or really just analysis. So you've got somebody that's looking to go to a different part of the country. This is a great table here to bring up and help them understand what's going on. 384 metros is tracked by Freddie Mac. And remember, when we looked at Tampa, look at this number over here. Since March 2020, Tampa's up 71.5%. Since 22 peak, 4.2%. Year over year, 6.9%. And so that 71.5% since March 2020 is like 30% above what the national number is. So you got to think, it's like, man, how much higher can Tampa continue to go? And CoreLogic is betting against it continuing here, as they have them number 3, has Tampa number 3 on risk of home price decline. But we saw, and I think it was, I'll find it right now, I think it was Zillow, when we were just looking at projections for Tampa. Let me find this. If somebody remembers, you can put it into the, Zillow's top 10 markets for, this is a Now BAM article, for 2024. And Zillow has Tampa at number 10 on hottest housing markets. Zillow has Tampa continuing to go up in price. So this is like, if this is where seeing the data nationally on what's going on a macro level, the macro trends and the projections as an insider of that market is important. If we have somebody in Tampa here on the hot sheet, jump into the chat. If I'm a real estate professional from Tampa, okay, in this particular situation, you can find situations like this for your market. I might show the dichotomy between, okay, Zillow saying this, CoreLogic is saying this. Here's what we're seeing inside of these neighborhoods in Tampa based off of the information that I have at my fingertips from the MLS. That's what's going to be a separator in your market, because you don't know who in Tampa saying, okay, we're going to be in a hot market, or maybe they see CoreLogic, oh, we're going to be home price decline. Here are the 2 projections from national sources. Here's how they got to these numbers, but here's what's actually happening. And you can go into that micro level as the real estate professional in your local market and break down this neighborhood to this neighborhood and this. Hey, in this neighborhood where there's been 300% increase in multifamily production, I could see more inventory coming onto the market because it's also a high Airbnb market. And I could see that inventory could bring home prices down. But over here on this side of town, I don't see that because we're not going to have the inventory to support a home price decline. That's that inside baseball that your database, that the folks in your market, certainly buyers right now, are looking for. And to be that real estate professional that can provide it to them is what separates us here, everybody, all our BAMXers and everybody here on the hot sheet from the rest. Okay, number 4 for a high probability of price decline would be Daytona Beach area of Florida. So you see there 4 out of the top 5 projections from CoreLogic that have a high risk of price declines are in Florida. And then number 5 is the Atlanta region, according to CoreLogic, with a high risk of a price decline. Okay. So there you go on the CoreLogic reporting that just came out yesterday. We typically like to take a look at that each and every single month. You've got a full breakdown and links to everything inside of the show notes on BAMX, so you can access that there if you'd like to use that. One thing that we're also going to be tracking probably a little bit closer over the next couple weeks as we get into the middle of January, when historically you really want these numbers to start jumping up, is mortgage application volume. We have our mortgage application report from the Mortgage Banker Association, which was just released this morning, and total mortgage application volume is up, and it's up significantly. It's up 10%. Now, I'd be worried if this number was anything less than 10%. Okay, even with those interest rates ticking up, I would be concerned if this was less than 10% to start the year, because the end of the year, the last week of December, you always see mortgage application decline. Nobody's really, that concerned unless they're hot on a property to apply for a mortgage between, the holidays of Christmas and New Year's. So that's always historically, going back, a really down week. So had mortgage demand not jumped up significantly, as it did here, jumping up 10% to start the year, even with those interest rates in the 10-year ticking up in that first week of January, that would be a major red flag. What would be room to pause or caution on the spring market is if this number doesn't continue to consecutively go up here in the second half of January and early February. That's what we're looking for. That's what historically will drive a strong spring market, is numbers that go up each and every single week here early into the spring market. Be the best leading indicator for a strong spring market. Applications to refinance a home saw a significant increase from 19% from the previous week. So there's some more refinance people, folks that are looking to refinance. Here's what's interesting. Okay, refinance applications were 30% higher than the same week 1 year ago. So the interest rate 1 year ago, let's just take a look at that. I mean, how much different was the interest rate 1 year ago? If we take a look at, that would be January, we were at 6.21 on Mortgage News Daily 1 year ago. I'll show you what I'm looking at here. We were at 6.21 1 year ago, and yesterday we ended at 6.8. So mortgage rates are actually higher today than they were on January the 10th or January the 9th, 2023. We had our January 9th reading yesterday at 6.81 or 6.8, ticking up from 6.74. So right now, the interest rate is higher than it was 1 year ago, yet refinance applications are up 30% from 1 year ago. That's an indication that more homeowners are comfortable or have gotten accustomed to where the rate is, and maybe aren't counting on a significant decline. We'll see if that translates into buyers and would-be sellers onto the market as we get into the spring market. But really interesting piece of data that's kind of tucked away there in this mortgage application data from Mortgage Banker Association this week. Refinance applications 30% higher in the same week from 1 year ago. Applications for just to purchase a home rose by 6% for the week. We'll be looking for that number to go up in the coming weeks, as it is 16% lower than the same week 1 year ago. So purchase applications same week year over year down 16%, something to watch there as well. Real estate agents, according to Mortgage Banker Association, saw a new surge in demand from buyers who were previously sidelined by the higher rate environment, although it didn't correlate in a year over year increase. Consumers also expect rates to fall further, according to a report from Fannie Mae. We just looked at this. It's about a third of consumers expected to fall further, a third expected to stay the same, and a third expected to go up, roughly. So not all consumers expect rates to fall further. And obviously they've slightly actually increased here since the start of the year. Speaking of mortgages and money, how much money is actually out there available for consumers, for buyers? Mortgage Banker Association just put out their mortgage credit availability report, and the credit availability decreased in December. This is another one of those bullet points you can use when someone says, oh, we're going to get into a great financial crisis. We're going to have another mortgage crisis on our hands in this country. Well, we certainly don't have the credit availability. In fact, we have 10 times less the credit availability that we did during that run up. It's very difficult to obtain a mortgage, and there's just not as much, money coming into the system as there was then, or certainly even over the last couple of years. Mortgage credit availability decreased in December, according to the MCAI report from Mortgage Banker Association that analyzes this data from ICE Mortgage Technology. The MCAI fell by 4.6% to 92.1 in December. The decline indicates that lending standards are tightening. Lending standards are tightening right now, while increases in the index are indicative of loosening credit. Okay. So right now we're experiencing a tightening of credit availability and standards. You can see how much it's dropped just from 2016, 17, 18, 19. If this chart went back to 2007, you'd be astonished on how much more credit availability was during those years of 04 through 06. But you can see here on the chart in front of you that just, from what we saw in the lead up to 2020, we are more than half under where we were on credit availability during those months and during those time frames. Here's a look breaking up the different mortgages: conventional, government-backed, jumbo, and conforming, all showing the same thing, a huge decline in credit availability, again, according to ICE Mortgage Technology. Charts are done by Mortgage Banker Association. Here's the chart that I always reference, because this one does go back to 2004. This will be available for you inside of BAMX. Mortgage Credit Availability Index going all the way back to June of 2004. This shows you that we are 10 times lower on mortgage credit availability than we were in 2005, in 2006, and when it peaked out there in 2007. You could see after the great financial crisis and the mortgage crisis broke out, you saw that just completely crater before and stayed at that level until about 2013. Stayed at about 100 on the index, dropping from near 900 on the mortgage credit availability index. Stayed at that level of 100 till about 2013, where it actually went up near 200 just before 2020. And now we sit at 92.1, below 100. This is really the lowest level that we're sitting at outside of a blip in 2008, 2009 that we've seen in the last 20 years on credit availability. So lending standards are very tight. It's not easy to obtain a mortgage. It's one of the biggest indicators of why we are not going to have a mortgage crisis in this country. That's my favorite chart to show people who say, hey, we're about to have a mortgage crisis. Oh, really? How difficult it is to go out and get a mortgage. Here's the data. take a look at this. It's one of those that's nice to have on hand. Something that's nice to start our Wednesday here today is that we have dipped back below that 4% mark on the US 10-year Treasury. We'll see what the market's feeling is throughout the day as we lead up till tomorrow when we get that CPI report. Everything is going through the lens of inflation. We'll cover and dissect CPI to the fullest tomorrow. Make sure you're subscribed here to the channel so you don't miss those big hot sheet moments. Tomorrow will certainly be one of them. But nice to see that the market maybe has some indications that, hey, we're going to get a good read on inflation. And you see the 10-year has dropped back down below 4%. Hopefully that will support a lowering on the 30-year fixed as we sit here at 6.8 off of yesterday's read. If you want to prepare for this year, we have got a big virtual event coming up on February 7th. It's the week of Super Bowl week. It is called the BAM Pro Bowl. Okay, this is going to be on February the 7th. Let me get, why isn't this working here, Haley? Can you switch over to my, I don't know. I think when you switch screens, there's something happen. All right, there you go. BAM Pro Bowl, February 7th, 2024. We'll put a link down below. Put a link in the chat and put a link down below. It's a free virtual event for all real estate professionals. You should grab your seat now. It's going to be from 12 to 3 Eastern time. And look at this lineup that we have. We've got Ryan Serhant, Neil Dingra, he's a big time mortgage guy. David Childers. We're going to talk about the 2024 housing market with David Childers from Keeping Current Matters. We've got Jason Pantana, Gary Gold, Danielle Garofalo. Danielle's brilliant on luxury. Marie Lee, talking content. Jimmy Mackin. And I'll be involved as well as the Broke Agent and Actually Agents. We actually have a national anthem by Amanda Bradford, all hosted by BAM. This is an event you do not want to miss if you're a real estate professional. Grab the link down below. It's a free event for everybody, whether you're a BAMX member or just somebody that just consumes the hot sheet passively. This is something that you would want to attend on February 7th. Grab your free seat. Link is in the chat, and we'll also put it in the description as well for the BAM Pro Bowl, February 7th, 2024. Also, if you missed the pod with Lance, we're getting a ton of feedback on this pod with Lance Lambert, specifically on his take on the silver tsunami. We covered the silver tsunami here on the hot sheet. Silver tsunami. There's some analysts that believe the silver tsunami could create more inventory as early as late 2024. Lance Lambert disagrees with that. Lance obviously was the real estate editor for Fortune for many years. He just launched Resi Club. Go check out Knowledge Brokers podcast for that, or the article on Now BAM on Lance's reasons why he doesn't see a silver tsunami coming. That pod just went up last week. This Friday on Knowledge Brokers pod, we will have Danielle Hale, chief economist from Realtor.com. So we're starting the year with a lot of analysis from the big dogs and seeing what they think. Danielle Hale from Realtor.com is going to be joining Knowledge Brokers on Friday. Go make sure you subscribe to that channel, of course, to get all of that content. Hope you enjoyed this edition of the Hot Sheet. Tomorrow, we're going to have a big day with the inflation reading, the CPI report that we are all waiting for. The first CPI report of the year could give us some indications on when we can have a better feeling on when interest rates will be coming down from the federal level, which could trickle into, obviously, what we care about, the 30-year fixed. That is all for today. We'll see you back here tomorrow. Until then, toodaloo.